All right, hello everyone. Welcome back. Today we're going to continue in the introduction to price reading, and we're going to talk about the basics of scale. All right, so before we go into scale, let's take a little review of our upside pricing mode and downside pricing mode. We know that upside pricing mode creates higher highs and higher lows as price is moving up, and downside pricing mode creates lower highs and lower lows as price is moving down. So, before we answer the question as what is scale, we first have to go off an assumption that will be shown to you later on as true, but we have to assume that price is fractal in nature. What does fractal mean? Um, the most basic definition that I can come up with is that a fractal is essentially whatever, let's say we have a structure or a shape or a pattern, and that the building blocks of that pattern contains the pattern on the larger scale. So this might be known as above, so below, but what we're looking at is structures to be repeated on the building blocks of those structures. So if that sounds a little bit abstract, you'll see what I mean in a minute. But we're looking at the same price modes, upside price mode, downside price mode within upside price mode and downside price mode of a larger scale. So you could have a large scale upside price mode, but you could have, tons of downside price modes that are lower scale, and they'd be evidently seen in the retrace as if we're upside price mode and price goes up as it comes down to rebalance and to keep moving up. Those are all downside pricing modes that's seen in the lower time frames and can be picked apart pretty evidently. So just an example is that we have an up close candle. So in my case, it would be a blue candle. Let's say that's a daily candle. If we look inside that blue candle on the daily and we go to the, I don't know, we can go to the 1 hour, we can go to the 5 minute, 15 minute, you're going to see lots of upside price mode. Sorry. Yeah, you're going to see lower scale upside pricing mode. So if we see just a one big candle, inside that candle, we're going to have upside pricing mode. Similarly as a down close candle, if we have a big red candle, on the inside of that candle, we're going to find downside pricing mode throughout on all scales because price is moving down, but the way it moves down is the same way it moves down on a larger scale. So we can expect the same type of price movement. So what if if what I just told you was a little bit abstract? Here's a quick example, and we're going to go deep into this, and just to show you how much scale is a factor, how it becomes evidence. So we have a large scale downside pricing mode. We have a low, we have a high, we have a lower low, we have a lower high, and now we're going to create a lower low. Inside, while this lower low is being shot for and being created, we have a downside pricing mode on the inside here. Now, this downside pricing mode isn't necessarily creating this big move, but on the inside here, we can get the move through this downside pricing mode, sorry, upside pricing mode. You see there's a little upside pricing mode. If we went into the lower time frame, you could see, um, you know, high, low, higher low, higher high, higher low, higher high, higher low, higher high, higher low. And then it shoots up and then it starts the reversal and where it starts creating um, lower low, lower high, lower low, lower high. But notice that's all within this big high low movement. So that's how you can tell it's a smaller scale. Now, if that's a little bit difficult to look at, there's another way we can use it, and it becomes more useful when we're looking at analyzing the market to see, what's going to happen. If we're trying to get in or we're trying to see, potential turning points, we can identify them beforehand using lower side scale. So imagine that we're down here, and let's say we assume or we're going to expect a downside pricing mode when price comes up back to here to rebalance this line. As we've seen before, price comes up to this area that it just broke. very, very often to continue moving down when it's in a downside pricing mode. So if this is the big scale and we come up to rebalance what just broke over here, we can expect a move in here. Now, what would that move look like? Well, since price has to come up to get there, we're expecting upside pricing mode followed by downside pricing mode. But notice that it's going to begin on the lower scales, just as it begun here. You know, price isn't just going to start here and then create this lower low immediately with showing no signs of downside pricing mode. It's going to have to do a downside pricing mode on the lower scale to get down there. Similarly here, if we have price getting up to here and let's say it doesn't want to turn over there, or it wants to turn and start coming down, then we have to have a change of upside pricing mode to downside pricing mode. Now remember when I told you inside this big blue candle you should be able to see upside pricing mode, and inside this big red candle you should start to see the beginning of downside pricing mode. So if I was to come up in here and let's say I'm looking in this area for price to turn. If I'm looking in this area for price to turn, all I'm looking for is for an upside pricing mode to start turning into a downside pricing mode. And then I can start to be more confident about that being the turning point. So what we're going to do in the next slides is go into these blue rectangles that I have marked out here. And I want to show you what those look like on the lower time frame, so you can start to piece together how scale is important and how it's used. All right, so now we're looking at the first blue rectangle, the higher one, and now we're on the 5-minute chart. So what do we see here? Well, we see an obvious upside pricing mode. We have higher high, a low, higher high, higher low, higher high, higher high in here, and then comes down to here, higher low, and then finally another higher high up in here. And what does it do? It creates a higher low, and then it creates a lower high. So this is our first, I say we could call it a symptom or a possible clue as to, okay, maybe price is starting to trickle down. So what does it do? So it creates a lower high, sorry, it creates a higher low, then a lower high, then it creates another upside pricing mode. It's not really breaking this. Now create another lower low. And after that lower low, we come down in here. What do we create? Another lower high. So what do we have? Higher low. We have a lower high, lower low, sorry, higher low, so nothing yet. Then we have a lower high again, lower low, lower high, lower low that starts to break into this area over here. And we see we broke this. It's I don't have a line for it, but if you saw it, this goes lower than this, so this breaks, and we have a lower low, and now we have a lower high as well. So what do we have? We have higher highs and higher lows, slowly shifting on the lowest scale, right up in here, starting here. We see lower highs being created and lower lows. So we have a small scale low side pricing mode, or downside pricing mode, my bad. And now we have another lower high. So we have lower low, lower high, lower low, lower high. And at this point, we can become pretty confident that price doesn't want to continue going up, because now we've just made our second lower low and our second lower high. And what do we see happens? Price hangs around here for a bit. It doesn't want to go over this high that I've marked here with an arrow, creates another lower high, comes down, breaks this, creates another lower high, and then bam, gaps down. Where does gap down to? Keeps going all the way down to here. And now we start our downside pricing mode. Lower lows, lower highs, lower lows, lower highs, lower low, lower high, all the way down to here, lower high. And notice how these price points that were important in the past, previous highs and lows were important in the past, they become important again. That is not by coincidence. We'll talk in a later video about why that's important. But this is also, I extend these lines just to show you how important these levels can be, and how the ITs, the smart money, uses them to as reference points for their orders and for their order flow. So we'll look more into smart money and retail money later on, but this is just a quick introduction as to what that is. But we see this upside pricing mode going into a downside pricing mode on the lowest scale, on the 5 minute. And what kind of move are we looking at? We're looking at a daily move. So think about it. If we start to see these kinds of signals on the lower time frames, now we see price coming down in here and it creates an even lower low. Then we can start to say, all right, now that we have a downside pricing mode that was expected at an area that it's expected, and we start seeing it on the lower time frames, then that just gives you more confidence to start saying, okay, now there's a downside pricing mode in motion. And evidently, that's what happens. And we keep going down as was seen in the last slide. All right, and this is the second rectangle, the lower one, that we had originally looked at. And again, we have an upside pricing mode that's a little bit harder to see, but we have a high, a low, higher, higher low. This is actually the low down in here. It reached back into on the lower time frame. But lower high, sorry, one more time. Higher high, higher low, no higher highs yet, no higher highs yet, no higher highs yet, no higher highs yet. So nothing in here. And now price doesn't want to create a higher high. And not only does it not want to create a higher high, but it starts dipping below this. So now we have, this was the upside price motion on the lower scale that we're looking at. We have, higher high, higher low, higher high, higher low, higher high, and now it shoots below. And now we have a lower low. And then it comes down to here, lower low, just this area that was touched, comes back up, creates a lower high. So you see that price is breaking through old areas that used to hold price, coming back up to what was just broken, comes back down, creates a lower low and another lower high up in here. And now we continue our downside pricing mode. So what happens? Well, we have our upside pricing mode. And at this point here, we see price not wanting to go higher. How do we know it doesn't want to go higher? It breaks through this low. It does not want to continue on this scale's upside pricing mode. Now, the fact that it doesn't want to continue this scale's upside pricing mode within an area, also known as this big blue box, that we can expect price to turn on a downside pricing mode from the large scale, then all we're doing is looking for this sort of price action to begin happening. We want to see the change from the upside to the downside. So now that this is happening, we see lower scale downside pricing motion in action within an area that we can expect large scale downside price action. And we can see it start happening over here. Notice how it creates here, comes down, creates this and another lower low, comes up to an area up in here that was just broken, up in here, and continues going down. So these areas that are previously broken, again here as well, breaks through, comes right back up, touches this area and shoots back down. Similar to this area, touches what broke up and comes right back down. This happens time and time and time again. And you'd be foolish not to notice it or not to think it's important, because it very much is. And notice here how it didn't come back. That's very important. Why? Well, it left a gap in price. Price didn't come right back up to fill the place that it just broke. Price wants to do that. Price, whenever it breaks an area, wants to come right back to where it just broke. Seen here, seen here, seen here, seen here. Even though it shoots right back up before it moves down, creates this little touch on that and shoots away. The fact that this didn't is important. And we'll see that later in the future as to why it's important. But just wanted to show you right now how this upside downside pricing mode is working. Okay, so let's take a look at another example. Here we're on the 3-hour chart. We have a clear upside pricing mode, high, low, higher high. Should be an HH, higher low, higher high, higher low, higher high, higher low. So price is clearly on upside pricing mode. Now let's take a look at what happens on the lower scales inside this area when it comes to rebalance this place that was just broken. Let's take a look at those two. So, what's going on in here? This is the blue rectangle zoomed into the 3-minute chart, and we're going to see what happens. I like this example because it's not very clear. It's a little bit choppy, in fact, quite choppy, and we're going to try to make sense of what's going on. So what do we have here? We have a high, we have a low, lower high, lower low. So in this area, we can see clear downside pricing mode. Now what happens here? We have a lower high being broken to create now a higher high, comes right back down, shoots up and creates a higher high. So now we can expect an upside pricing mode, or at least that's what price action is signaling to us right now. Now, what do we have to do as market readers, price action readers? Well, if we know that a downside pricing mode always ends in a lower low, and when we switch to an upside pricing mode, what are we going to expecting? What are we going to be expecting? Are we going to expect price to come right back down and continue? Or are we going to expect a higher low? The answer is a higher low because upside pricing modes are higher highs and higher lows. So we have the lower low down in here. Now we have a higher high, and we have price coming down into here. Is this the higher low? It's a great question. Now, if I were in the market and I was looking at this, I could say, okay, well, it's retraced deeply back into here, and chances are we're going to create a higher high after this, and we can start seeing shooting away, and we say, okay, now the higher high is going to be created. But what does price do? It doesn't create a higher high. So until it creates a higher high, we have no confirmation of an upside pricing mode in order. Why? Well, we'll learn about it next week when we talk about smart money and retail money. Um, but this is an example of manipulation. We have price coming down, creating what we think is a higher low, and we're going to expect price to go up. And let's say we're trading and we say, okay, trade in here, stop loss right above this, or right below, sorry. And we can be confident price is going to go up and start creating higher highs, and it's off, and we're going to make a ton of money. Well, when price doesn't create this higher high here, that's reason to be worried, because now the mode isn't clearly defined. We know that it wants to create another higher high, but we don't know what the higher low is. Remember, the higher low is created just before the higher high is created. So now that there's no higher high here and price shoots down again, then this area, it doesn't have the same importance and strength as it did when it first started leaving. So what do? We analyze, we see what's going on. We have a short-term upside pricing mode, short-term downside pricing mode. Comes right back down here, and I don't have a line through it, but it just breaks this slightly. Now, if you had a position in here and you were long and you were starting to go up in here and you're starting thinking, okay, price is going up, what does it do? It comes right back down here, takes your stop loss, gets you out of the market, and then it starts going up. Isn't that something? When we talk about retail and smart money, you're going to start to see why smart money does that. But this is an example of manipulation. So manipulation meaning having everyone think price is going to go to a certain way and then having to do the exact opposite just to get everyone on the wrong side of the market. And we'll know why it's important that everyone's on the wrong side of the market later on. But I'm trying to tie things in together little by little, first talking about what price is doing, and then when we talk about the theory and market makers and all the manipulation that occurs, you'll start to make sense of why it happens. So it doesn't create this higher high, and it comes and creates a higher low that is actually lower than this. Now, this higher low is with reference to this lower low, but it is a lower low than this. So again, we have no confirmation. There's scales, there's modes between modes, but so far, if we're talking about this one, lower low, higher high, this is still a higher low than this. So this mode being broken, we can still expect a higher high to be created and then to continue the upside pricing motion. Just we don't know that in here yet. Now as price comes up, now it creates a higher high. So now we have what we're looking for. We have a higher low and a higher high. Now we can expect this higher low with much greater confidence. Why? Because we have a downside pricing mode we have first confirmation of an upside pricing mode. Price comes down, takes this out, it gets people going the wrong way, creates a higher low, just as the price action tells you it should, and now creates a higher high. So now we have confirmation of the upside pricing mode on the lower scale in an area on a much higher scale, which was the 3-hour chart where we're expecting price to go up. So we start seeing lower scale movement, and then in an area we're expecting higher scale movement. So it puts us in a good place to assume or to be confident that this downside pricing mode switching to upside pricing mode is going to start holding price and it's going to start going up. And on this chart is the the second higher blue rectangle on the second example we've seen. So this is a lot cleaner. What do we have here? Well, we have a 3-minute chart. We have a high, we have a low, we have a lower high, lower low, lower high, lower low, lower high, lower low, upside pricing mode. Now what happens here? Price breaks a higher high and breaks this lower high that was just created. Now is price going to go up from here? Are we 100% sure? No. How can we be sure? Now when price creates a higher low and decides not to come down and create a lower low and shoots up and creates another higher high, and now we have confirmation that price is in upside pricing mode because it changed the entire direction of this downside pricing mode that's coming in, breaks this last one, and it's on its way up. So we have a higher high, higher low, higher high, higher low, higher high, higher low, all within a 3-hour area that we expected it to break. And this here line that we're talking about is where we expected it to keep. This line is the larger scale high. Now this is basically the retrace that comes up. So we have basic on the larger scale, price come up from a higher high, comes right back down into here, and this is the area to the left on the 3-hour chart that was just broken on the large scale upside pricing mode. So we're looking for this upside pricing mode to begin at an area where we would expect upside pricing mode, which is the area that was just broken. Basically, we were in here in this higher high, but on a much larger scale. So notice that also the break happens, the break of the lower high that's going to start signaling the move up happens to break the same area on the much larger scale that says the move is going to come up. Now, it doesn't always happen that way, but sometimes it does, and it's really neat to see it because you start to see how calculated and how precise price action can really be. Right, so that's it for examples and lessons today, guys. So what I want you to do is go into the 4-hour charts or 1-hour charts, just a larger scale, and try to find your upside, downside pricing modes as you've been doing before. And now what you're going to do is at for each upside pricing mode, you're going to go into the lower time frames at every higher low. So you're going to find the higher low, every higher low on an upside pricing mode, and within that higher low, you're going to try to find the downside price mode followed by an upside price mode. So just as the examples I was showing you, where we expect price to turn there, we see it turn there, and we're just going to go into the 1-minute and 5-minute charts and try to see if we can find the downside price mode followed by the upside pricing mode inside the larger scale pricing mode reversal. So similar to downside pricing mode, if we have price coming down, we're going to look at every time that it comes right back up to create a lower high. So at every lower high on the downside pricing mode, we're going to zoom in there on the 1-minute, 5-minute charts, and we're going to try to find the area where it turned. And we're going to try to find the upside price mode followed by the downside price mode that signals the reversal on the lowest scale. Now, this last part, don't worry about it too much, but this is just a foreshadowing into the next lessons where we're going to talk about larger scale turning points and how we can use scale, the introduction, what I've just talked about today, to try to find possible turning points in the market. We're not going to act upon those turning points because we're not trading, but we're just going to look at these areas um, as potential places where we'd expect price to turn, just as we're doing right now, um, looking at the downside pricing mode, upside pricing mode, and zooming into lower scales. So we're going to look at that later on, and we're going to try to find out how we can start to see potential turning points in the market using that, using scale, and using smart money and retail money logic. And so, as I just mentioned, the next topic we're going to talk about is how to determine turning points during a price mode. So we're going to try to see when is price coming down in a downside pricing mode, how far is it going to come up, and before it keeps moving down. So if price in a downside pricing mode, where is that lower high going to be before it continues and creates another lower low? Or if we're in an upside pricing mode, we're going to try to find where that higher low is going to be before price continues up and starts to create a higher high. So see how we're taking this step by step, and we're going into smaller scales and little by little, and we're trying to piece together the market from a top-down approach. And what that helps you understand is you just want to be localized within the market. You want to know where you are at all times to understand why price is doing what it's doing and what it could potentially do and what you'd expect it to do. So we're going to look at all these different types of scales, and we're going to start determining just these turning points and how to find them and how to find places where we'd expect them, and use that in your analysis. Hope you enjoyed what we saw today, and don't forget to like, comment, and subscribe for better content.